Gentlemen, welcome to this evening's meeting of City of York Council's Audit and Governance Committee. I am not the chair of the committee. My name is Bryn Roberts. I'm the Director of Governance. I will begin with apologies for absence, which will make the situation slightly clearer. So we have received apologies from Councillor Hollier, the chair, and substituting for him this evening is Councillor Orrell, from Councillor Jane Burton, and substituting for her is Councillor Baxter, from Councillor Vassey, and substituting for him is Councillor Healy, and from Councillor Coles and substituting for her is Councillor Whitcroft. I hesitate to ask, are there any other apologies for absence? So I will then move on to the first substantive item of business, which is appointment of a chair for the evening. Could I please have nominations from the floor? Councillor Whitcroft.
I'll nominate Councillor Fisher, please.
Councillor Fisher. Are there any other nominations? Can I have a show of hands for Councillor Fisher, please? Assuming Councillor Fisher is content to take the chair, over to you, Councillor Fisher. Must invite everyone as I'm in the meeting. Thank you very much.
Thank you to the committee for electing me to this esteemed post. Welcome to the January meeting of the Audit and Governance Committee. Could I just remind all members, please, and I'm as guilty as anything myself, to turn your phones to silent. Turn your phones to silent if you could, please. There are no scheduled fire practices, so consequently, if the fire alarm does go off, if you could leave by that door over there, down the stairs and meet up outside. Toilets for those, I think everybody here probably knows, but toilets are through that back door over there. Okay, so we'll move on to the first item on the agenda. Apologies for absence. Oh, not those, sorry. Declarations of interest, sorry. Do any members have any declarations of interest that are not shown in their register? Good, thank you for that. Moving on now, I'm going to ask to change the order slightly and move public participation, because I happen to know that one member is speaking on item 3 on the agenda. So with your permission, I will take public participation first, since it seems pointless making a decision and then hearing about it afterwards. Who are the public participants? Let's just check. We've got... We start off with... Right. If I could invite Gwen Swinburne, please, to speak to the committee. Thank you very much. You have 3 minutes.
Don't need to remind me, I'm in time just. It's close. Chair, this is a 427 million capital programme I'm referring to, and the papers before us show that key systems and controls have not been working as they should for a long time. That conclusion is not drawn from a single source. It's reflected across the risk register, internal and external audit reports, and at least what we see publicly. What is particularly concerning is that members have been consistently and steadfastly asking for a major project's internal audit since the spring of 2024, yet it has only come forward just now. It is clear the current A&G assurance reporting has not enabled members to properly discharge their oversight role. Turning to the risk register itself, the core assessment has not changed. Gross likelihood remains probable. Gross impact remains major. The score remains 20, and the stated consequences remain wholly negative. Yet the net impact is reduced from red to orange, even as the direction of travel is recorded as slightly worse in the risk register. The KCR7 supplement simply restates the scale, the complexity and pressure of the programme. It describes governance arrangements already in place when they were in place when the serious problems arose, and they seem no different. It refers to the capital strategy, which is only forward-looking. That doesn't address control failures nor mitigations. Nowhere does it explain why the impact of failure today is now judged to be only moderate. Sorry, it's detailed. The internal audit report on major project delivery, point 33, is pivotal, as it confirms weaknesses identified were systemic, that existing controls did not operate effectively, and that assurance depends on future corrective action, not improvements already achieved. Taken together, I am lodging a concern that the internal consistency of KCR7 is out of sync. Finally, I ask that the governance arrangements of this committee itself be reviewed under the auspices of corporate scrutiny, as the statutory officers responsible for the governance of the committee are also the subjects of the committee's scrutiny, which, as we see today, is a critical yet easily avoidable weakness. I'll draft an issues paper for you, but there are multiple instances, including on this agenda, where members are not able to properly execute their oversight role for lack of timely and/or insufficient reports, particularly in governance and audit governance matters. For example, neither the corporate performance monitoring report nor internal audit progress reports are on this agenda tonight, so members have no
If you
tools.
could be winding up now, please.
I am.
Thank you.
So members have no tools to inform the audit plan as they should. I'm sorry, I'll send it to you because it's a lot of stuff, but I need to think about how we can get to corporate scrutiny.
Thank you for your contribution. We'll take your views into account later in the meeting. Thank you. And our second speaker is Paula Widdowson.
Thank you, Chair. And thank you for bringing the internal audit report to this meeting tonight. Internal audit findings as serious as this are rare for two reasons. One, it's highly unusual for internal audit to be so critical and so strident in their criticism of the performance of the council. Secondly, the sheer financial scale of the issue that this council now faces. An overspend of just short of £20 million on a single capital scheme is quite unbelievable. On a capital scheme of such modest level, it's unforgivable. The original budget for this scheme sat at £26 million. It's now forecast to outturn at over £54 million. More than double the cost in the last 12 months alone, and £30 million more than originally agreed. Members of this council and members of the public deserve the right to see in black and white the findings of what has gone so catastrophically wrong. The Audit Committee should debate this item tonight in public, and the full findings of the audit should be published tonight. While I've not been able to see the redacted report, I have discussed its broad themes with our members on the committee, and they are clear that the audit points to two significant issues. The last-minute ideological changes made by the executive after the contract was awarded, and the sheer lack of capacity and expertise in the department responsible due to the botched restructure this administration oversaw. This executive cannot and should not be allowed to hide their financial ineptitude beside spurious claims of confidentiality. Somewhere between 20 and 30 million pounds of public money has been wasted. This is unprecedented in the history of this council, and the time for accountability is now.
Thank you very much indeed. Well within your 3 minutes. We'll take your views into account when we come to debate in a few minutes. Okay, we now move on to item 3, exclusion of the press and public, to consider the exclusion of the press and public from the meeting during consideration of item 13. If I just ask the monitoring officer, are there any legal reasons why we can't take this in open council?
Thank you, Chair. The challenge that members have is that a number of the contracts that are referred to in item 13 are still extant. And therefore we still have relationships with those developers under those contracts. So debating issues relating to specifics of the contract in public then potentially hands a weapon to a developer in any dispute that it seeks to raise with the council. That gives you an issue to consider, because the last thing you want to do, having obviously taken account of the overspend that's been mentioned, is to then increase that overspend by giving somebody a weapon that would allow them to claim even more money off us. Ultimately, it is obviously a decision for members as to whether you would like to talk about it in public or in private. Mr. Taylor, the Director of City Development, is here with us. Having spoken to him before the meeting, he is entirely comfortable with the concept of bringing a separate report back next time round. So I think the 11th of March, to deal with much more of this in public, which would then allow us to ensure that there's nothing from the confidential annex that comes out that shouldn't, but also deals with as much of that information as we can in the public, if that's an option that's attractive to members.
So as I see it, we have three choices. We can either exclude the press and public and deal with it tonight. We can deal with it now in open council at the end of the meeting, or we can take the advice of our monitoring officer and our Director of City Development to bring a separate report to the next meeting. Could I have a proposal as to which you would like to do, please? Yes.
Before we proceed, Chair, if I may just ask one final question of the monitoring officer. What is the worst case scenario of us discussing this in an open meeting tonight as the report stands?
I suppose the worst case would be that we have a claim from one of the contractors that we are still in that contractual relationship with, for abnormals, for various other things under the contract, which could give rise to another 7-figure plus claim. It's something that, you know, Mr. Taylor is probably better placed to give you pure details on that quantum, but that's the sort of thing you sit at.
I'm comfortable with that answer, Chair, but if we want to hear Mr. Taylor, that's fine.
If you'd like to just expound on that, I'd be grateful.
Thank you, Chair. So there are live NEC contracts, and they're incredibly complicated on multifaceted levels. More so in terms of the time span and the changes that have taken place since the specific contracts have started to now. So fundamentally, how we've managed those contracts and some of the items and how they're referenced within the audit paper would in effect present them with information that when you get to the end of the contract, potentially could give them a position where they could argue against some of the change notification processes in terms of the way which, I'm being really careful how we word this, the way we've handled those change notification processes, and could open us up in the legal process at the end to those claims. Because any scheme of this scale, you end up with a number of outstanding change notifications that will end up in some sort of either the formal mediation process or will end up in a legal process. And the aim is always to avoid the legal process, and actually you settle them in mediation. So this report would open up that specific process because of the nature of the report. And as I said, I'm quite happy to come back and in a draft version that actually includes most of what's in here, but not the actual detail, that then doesn't open us up specifically to specific schemes, which this potentially does.
Thank you, Councillor Orwell. Yeah.
Yeah, I'm not sure who I'm asking this to. Gwen said earlier that you bring the report back, which will give us the details that we can't, the pink paper said we can't discuss tonight. So if we're going to get those details eventually, why can't we? And I know you've nuanced it a little bit there, but what's the difference between discussing it now and discussing it in March?
So the difference isn't the discussion around process, and Yeah, fundamentally, most of this happened before I was in
Yes.
post in any event, so I can play that card totally at this stage.
Yeah.
But fundamentally, there is details of specific schemes in here, and I wouldn't want that out in the public domain, not because it's not of public interest, but fundamentally because we don't, as York, want our contractors to have that information, which then potentially could open us up within the way in which the NEC contract works for claims for payments. The way the NEC contract works is, in effect, you set up a series of schemes. If you're buying a pencil, this is £2, but actually we want an extra top for our pen. Actually, we want to turn it into a pen. So the contractor might say, no, actually that's £100. We may say it's 50. We then have someone in the middle that mediates that and said, actually, no, it's 40. But the contractor might actually then say, no, I don't agree with that, but I'll defer it to the end. The bit in the middle in terms of how we've managed that process, as in how we formally manage that process, and some of the stuff that's outlined specifically around the schemes could put the contractor in place that actually, no, it's 100, not the 40. If that, try to explain something that's really, really complicated, but fundamentally, we want that price at the end to be 25 and not to be opening it up to any kind of legal process.
Bryn?
And ultimately, from a procedural perspective, members will effectively get 2 bites at the cherry. You'll be able to talk about all of those details in private today, and then you'll get another report in public where you can talk about them again, but in much more detail in public. Shall we put it like that?
Councillor Rose.
I came to this meeting expecting most of the conversation to be in private session, partly to take the politics out of it, because, you know, without talking too much into the confidential papers, it's evident that some of these issues were during former administrations, and I think it'd be better to take all that air out of that and have a conversation about where we're at, how we got here, and particularly how we are confident that none of these issues continue going forwards. Slightly irritated to find that in public participation, a councillor of our council has misrepresented events and the papers to directly bring the council into disrepute. Don't like it, not happy. She does have access to these papers, as do all councillors. She knows that this predominantly points at contracts as much as anything else, and has chosen to pretend that's not the case. I'm not happy. But I think that talking about all of that in open session, not being able to talk about the private papers, and also, you know, not having the exec member here and not having a better set of papers doesn't really help us with the long-term important part of this, which is how we ensure that project delivery going forward is better, contracting going forward is protected, we resolve any outstanding issues with existing contracts, all the stuff that we're talking about. And obviously we can be trusted to, in public session, not say the things that we can't say. We could have that conversation in public, but we'd be omitting stuff that I think it is important to talk about. So, you know, I support Bryn's proposal from that perspective. But it's quite irritating that the councillors around this table, I fully trust to be honest and open and have a good civil conversation. And there are some councillors not around this table who politicise things, but they don't need to. And it makes it harder to talk in public session and brings the need for private session to meetings like this more frequently. So, yeah, I'll leave my comments there. I think that's been as moderated as I can be.
What you have to understand in local government is if something goes wrong and there is money spent that didn't need to be spent, you have to account for that to the public, and you have to show that you understand why that money wasn't spent in the correct manner, why more money was spent than had to be, and that you've learned from it. And I'm not convinced that we'll do it by taking it behind closed doors, because
that's why we need another meeting with the public papers that have a greater opportunity for a much bigger conversation than the 2 pages of public papers which we've got in front of us today. It is obviously a problem. We obviously have a critical mark on that particular topic. That's what the paper says. You know, the specifics behind it. I actually think the paper covers most of the private papers anyway. There's not that much in the private papers that aren't in the public papers, but that's why we need a bigger conversation with all the right people in public at a later point in time when papers have been developed for it.
And you're perfectly correct. We could discuss 90% of it under the Mazars report on page 1661, because that is a pretty good summary of it. But there are other things that are not mentioned in the Mazars report which are possibly pertinent to it. So have a proposal, please. Is that your
Happy
proposal?
to propose Bryn's suggestion.
Is that
We-
seconded?
Yeah.
Seconded? Yeah. Right.
Sorry, could we just recap what the proposal is?
Do you
For
want to
assistance then, my understanding is we deal with the matter as currently listed in private today with a further report coming back to the next committee, which will deal with as much as is physically possible in public and potentially will bring you some additional information and possibly even bring you the executive member. That's my understanding of what's been suggested.
I think it'd be very useful if the executive member was present. This has to be present for this as well.
Can I suggest we tweak that a little bit? The only people left in the management chain that have any knowledge of this will be A, the executive member, and B, the chief operating officer. So I'd request that both of those were there. 2, before you go off and write your public report, you have a conversation probably with Tony and the chair about how much you can put in the public domain, because I would like to see as much as possible come out. Also, one of the things I was going to bring up later is if we are going to have another set of pink papers, it needs to be a lot more detailed. So there's vague timings here. There's vague, there was not enough staff. You know, how many staff, you know, should we have? How many staff weren't there? Because there's no one who actually worked on this project we can now actually ask, because they've all gone. You know, what impact, and you know, it has to go into another set of pink papers, you know, what impact did the restructuring have? So all of those things, if we are going to do as has been suggested, then those are the things that I'd like to see come out, because it's cost, was it 20 million plus? You know, I'm sure if I was to say to Debbie, by the way, here's 20 million pounds for you to take off the capital programme, she would be quite happy. So I would, if we are going to do this, which I don't think we should, I can't see what in here we can't talk about. I'd like it to be more than a wordy paper.
I think a precise timeline of the actual events would be very useful if possible.
Yeah, we can. Yeah, you
when
can
it was
cover that
reported,
later,
when you know clearly when the underspend was first reported, the 7.5 million was first reported, what the actions of the executive were at that point, and so on. Because there needs to be a dive into exactly how we have managed both at the contract manager levels and the actual executive levels. Because at the end of the day, the executive are the decision-making body, and they should have been made aware of this overspend. Sorry.
I think just remind members that executive did discuss this issue in July of last year. So much of it, including some of the lessons learned, has already been made public. We discussed it in July. And I think we just need to I totally accept your point, Chair, about understanding what happened. That is the work that Gary and I have been doing with colleagues over the last few months. So officers can certainly report that, but we just need to be careful that this committee's remit is to focus on where in the process did it go wrong and how do we change the process, rather than focusing on the individual issues of this particular scheme. So just remind us that your remit is to look at the process, not the specifics of the scheme.
Correct, which is what I would like to see done. You know, we'll look at the actual the timeline and what should have been done better. You know, should we have a specific contract manager of a certain level in place all the
Just
way
need to
through?
be careful not to get into too much operational detail, which is the remit of officers rather than committee.
Okay. Right, so you have proposed that we defer this to the next meeting for a full report, which can be taken in open committee.
Yeah, look, we could talk a bit about it in public session and go into private session and then have a paper at the next meeting. If we need to have a small chat about the private papers on today's meeting, I'm happy to have it. I don't know what merit there is in that, if we can have a much more substantive debate at a later time.
That's proposed, seconded. All those in favour of that? Those against? Okay, we'll take it next meeting in a full report in open session. Thank you. Okay.
Yeah, we still will have an opportunity to discuss
We can
the
still-
bits that we
Yeah.
think are not likely ever to come out in public today.
We can do that under the
Okay.
audit completion report, for example, that's in there. Anyway, moving on, minutes and action log, pages 9 to 32. Who's taking this one? I gather you have some good news for us.
I have indeed, yeah. So if I bring you on to, so you'll need to move the minutes. And then I can bring them onto the action log.
Okay, you've got the minutes. Are you happy with those minutes, or are there any amendments or?
No, I'd like to make an amendment.
Right, what page, please?
Let me find it. Page 11, revised public participation protocol. And I do understand that Councillor Stewart has emailed Andrew Hollier, the actual chair, agreeing with the point that I'm just about to make. I think it's the second sentence down, either insert a sentence or insert a comma. Sentences. He confirmed that prior to using his delegated powers to amend the Constitution, he had consulted with representatives of the three political groups at the council prior to make the changes. I did watch it online. You might be left, or the public might be left, with the impression, and Bryn, who's used very precise lawyer language, I was very impressed.
That's what I'm for.
That the representatives of those political parties agreed with the decision. So if we could put a comma in there, or a new sentence that says neither the Conservative nor Liberal Democrats were supportive, that's the only change.
Yes.
Sorry, I'm not sure how entirely necessary that is. Consulted is the key point. Consulting happened. I'm not sure whether you're making a specific sort of party point there, or whether it's something that necessarily needs to be included in the record.
If you watch the playback and you're not a lawyer, it comes across that the consultees were supportive of the change. This change to the minutes points out that, and also I don't know whether the third consultee was supportive or not supportive of the change, but the Conservative and the Liberal Democrat consultee were not supportive of the change. So this is clarifying the fact that yes, we were consulted and it has the outcome. And it's one sentence apart from anything else. So I really can't see what the problem is.
That's all right.
I mean, look, these are the minutes of the meeting and that wasn't in the meeting. So that should not be in minutes. And for what it's worth, the correction you're making there implies that we're 100% supportive on our side, which I don't know, because it wasn't in that meeting. I was present at that meeting. That wasn't discussed by any of the three parties. So from a minutes perspective, whether that's true or not separately, and I have no beef, I'm happy to have that chat. We've been to the working group since then, this is an ongoing conversation. But from a minutes perspective, that was what was said, that's what was brought, that's an accurate set of minutes.
But it's not an accurate reflection of the situation.
That's objective.
May I suggest that we add it to the minutes of this meeting since you've now raised it?
Yeah, that's fine.
Okay.
If you want to add it to this meeting,
Include
that is fine.
Councillor Healy.
Not too sure, given the fact it's not on the agenda, that that's quite appropriate.
I think the minutes are technically accurate, although they may not quite reflect what was said at that meeting. I wasn't at it, so I can't say. So other than that, are we happy to accept those minutes, that I sign them as a true and accurate record at the end of the meeting? All those in favour, please? Right. Sorry, move on to action log now then, and give you some good news for us.
Thank you, Chair. So yes, the members have been obviously particularly concerned about the roles of independent members and recruitment for those roles. We have had interviews today, which will result in the appointment of subject to the procedures that we need to follow, because some need to be appointed by council, some are under my delegated appointment, but will result in an additional member for the Audit and Governance Committee, 2 additional independent members for joint standards, and a panel of 3 members for the independent remuneration panel. So I would like to place on record my thanks to Julie Gallagher for her sterling work in this. I have never seen as successful a recruitment campaign in relation to independent members in all of my time in local government. So I would like to thank Julie personally for that.
I think we should record those thanks in a minute from all of us, because the lack of independent members are worth their weight in gold. And I'm very pleased, Mr. Binney, you are no longer alone. But that's excellent news. So if you could just record that. Thank you very much. Councillor, sorry,
One quick correction to the papers on this, that it logs both of the action logs as completed action log. The first action log should be the in progress or ongoing action log. Just a minor typo in terms of the labelling of the both. On the first one, I guess one quick comment of, obviously I won't bring it up again as a KCR every single time now that it's got a closure against it, but I'm sad to see that officers have decided not to replace the local plan risk with an equivalent risk. It's something we talked about and A&D felt quite strongly on, but I understood that that's now closed as a conversation. And then we did put on here that there would be an update today on the working group, Constitution working group, public participation that we just mentioned. But Bryn, if you're happy to give the latest update on that, feels appropriate.
So by all means, councillor. So the working group met last week, as I recall. We spent some time talking through some of the comments that have been provided to the group from one of its members who was unfortunately unable to be present in relation to the public participation protocol. As a consequence of that, Julie Gallagher is going to go away and do some drafting on that to provide a revised document which perhaps fulfills that broader function of a public participation protocol, setting out all of the ways that the public can interact, rather than it essentially being this is how you talk to a committee. There were no particularly significant changes, as I recall. But those will be prepared and will be circulated to back to the Constitution Working Group and then on to groups for their thoughts before it then comes to this committee later on.
Yeah, I agreed that at this point in time, though, there will be further discussions, so who knows where we end up. But at this point in time, the changes weren't massive in terms of the process, but I think it's fair to say it's a fundamental rewrite of that entire bit of the Constitution. So it depends on how you look at it. But once we get that draft back and we take it to all three parties and come back to the centre, there might be more changes anyway. So, but I appreciate the work done on it. Thank you.
I think, if I may, like many parts of our Constitution, it needs a fundamental rewrite.
yes. I had one about 3 years ago, as I recall.
Yes.
Yeah. And I still bear the scars of it. Yeah. Okay, so anything else on the minutes and action log? No. Oh, sorry, Mr. Binney, sorry.
No, that's quite right. Not a strategic point. So sometimes I find the action log just a tad difficult to follow. I think where an action is ongoing or on hold, or most of them don't have a date in place, it's hard to determine whether an action is due or overdue. It's quite difficult to scrutinise. Is this a year late? If it's ongoing, does that provide assurance or not? I think a date, and therefore we can determine whether it's overdue or if it's due in 6 months, will be quite helpful. Otherwise, it's a little bit inaccessible, I think.
Correct. I think some things are continually ongoing. You know, you update some documents, are live documents, and you update them, but where there is a clear action to be delivered, a date would be very
no, absolutely. I think if something's ongoing, you provide the assurance that it's in hand and then it comes off the log. Or if it's ongoing because it's not done yet, get a date, do it, then take it off. I think otherwise you could have 10 ongoing activities, which doesn't really provide assurance in my view.
Point taken. Thank you very much. Councillor Rose.
I agree with that, I guess. In my early meetings as a councillor, I went through and corrected every single row by row and got a lot of people glaring at me. But on this one, it's true that, for example, the Action 94 that's in the ongoing is bringing a paper to today, which has been done. So you could put today's date on it, you can mark it as closed. The CGR at the bottom, we can put a date on that now, even though it's summer 2027. So there are things in there that we can chip off, but I think row by row, we know where we're at with them, and it's a fairly short list. It used to be quite a long action log, so at least it's manageable. But yeah, if it can be tied up for the next meeting, that'd be useful.
Okay, any further contributions? Councillor Merritt.
Yes. Yes, the log doesn't actually include any of the actions from the last meeting in it. And I particularly want to ask what has happened to the issue I raised in minute 36 about the second part of the section 106 internal audit report that hadn't that wasn't done as part of the original work, and that we've been asking at subsequent meetings to be done.
I will be honest, Chair, I can't answer that. I will go away and find out an answer for you, and I will report that around the committee so that everyone has it.
Sorry. Okay. Right. Okay. Okay, anything further? No? No?
Just a minor point of note that there are 3 actions from last meeting on here, so that just wasn't added as an action after the last meeting, but the other actions were on here.
Okay, you happy for me to move on to the next item? Okay, audit completion report, which is on page 33 to 120. If I could ask Mark and team to come to the table, thank you.
Good evening, Chair. Just for information, I'm Patrick Looker, Assistant Director of Finance. I'm here this evening because well, I'd be here anyway, but Emma O'Drain, who prepares the accounts on behalf of us all, she's unfortunately off sick today, so you'll have to put up with me. So the accounts process, we brought the accounts to you back in July, so you considered the draft accounts back in July. We then passed the accounts over to our auditors. So I've got Mark outside, Louise Staples. They've been undertaking all their work regarding the accounts to make sure, for your benefit, that tables add up, the numbers are right. They've produced their audit completion report. The following item, item 7, which almost needs to be looked at at the same time, is the revised set of accounts that we're preparing. There's some adjustments that we've made, some presentational changes highlighted in yellow, which have come about from discussions with the auditors, but it's probably best if I just pass over to Mark and Louise to take you through their report.
Over to you, Mark.
Thank you, Chair. In usual fashion, we'll take the reports read. We've got 2 this evening, so we'll just go through the completion report first and then take questions on that one, if that's okay. On section 1 of the report, it summarises what we expect to report once the work described in section 2 has been completed. The headline points are that we expect to issue an unqualified opinion on the financial statements without modification, which is the best type of opinion you could get. We have identified one significant weakness in your value for money arrangements. This is also referenced in our draft auditor's annual report, which is the next agenda item. So we'll go into that in more detail in that one. We are in the final stages of completing our work relating our wider reporting powers. This includes consideration of 2 objections received in the inspection period. As with previous years, we do not expect to be in a position to issue our certificate, as we are still waiting guidance from the National Audit Office on group scoping, which means we cannot complete our whole of government accounts at the same time as finalising the audit, but that is expected just to be a bit of an administrative process. On page 6 of the report, we highlight significant matters we discussed with management during the audit. The first one being the first time adoption of IFRS 16, which is an accounting standard for leases. The second one being a consideration of any deficits in regard to dedicated school grants, not particularly an issue at York because of the level of funding that you get, and issues linked to a previous control recommendation concerning the council's general ledger. I'll hand you over to Louise, who can take you through the rest of the report.
Thanks, Mark. So if I can draw your attention to page 8 of the report, that sets out the status of our audit. That has moved on a little bit since the time of drafting the report. So I can now confirm that we've completed our work on employee benefits, on investment properties, and the reconciliation around the fixed asset register to the general ledger, which is part of the property, plant and equipment item that we've got on that page. We've also largely completed our work on the valuation of land, buildings and surplus assets. And we've completed the work on the council dwelling valuations. Some of the steps that are highlighted within that page around audit completion and audit quality control will remain. They'll remain outstanding until we sign off the audit opinion. So it's usual to see those in that list of outstanding items. Page 11 of the report confirms that we've made no changes to our audit approach or to the materiality threshold that we set, and they were communicated to you through our audit strategy memorandum at the July meeting of this committee. Pages 14 to 17 set out our approach to address each of the significant and enhanced risks that we identified. In relation to management override of controls, property, plant and equipment valuations and the implementation of IFRS, at this stage we have nothing to report to you. In relation to the value of the pensions asset, we have identified an unadjusted disclosure misstatement, and that relates to the work that is done by the pension fund auditor and the assurance that we get from them. So the pension fund auditor identified an understatement of level 3 assets within the pension fund. That was of around 13.8 million. We would then calculate what City of York's share of that is, which is 2.5 million. However, you apply an asset ceiling within your financial statement, so it doesn't impact on the main balance sheet position. It just impacts on the disclosure notes around pensions. Page 18 confirms that we do not expect to exercise any of our wider powers. So if I draw your attention to page 20, that shows an unadjusted misstatement that we identified in relation to creditors. That's a fairly minor misstatement, fairly low value, and is just to do with the classification of creditors between short and long term. Page 21 sets out the disclosure misstatements and includes the pension fund misstatement that I mentioned previously. As you can see, there's very little in that slide, which is good. Page 25 onwards discusses the BFM work, which we'll pick up as part of our item on the auditor's annual report. And then just to run through the appendices, they set out our internal control observations. So these are things that have come to light during the course of our work. We don't actually specifically go out to look for internal control recommendations, but these have arisen through the work that we've done. There's also a follow-up of previous recommendations that we've made. There are, I think, 3 recommendations in relation to PP evaluations that we will follow up in our follow-up memo to this report, because at the moment we haven't finished all of the work on valuations, so we can't say whether they've been fully implemented. The report also includes the draft letter of representation, so the wording for that, and the wording for the draft audit opinion, which will go in the financial statements once we sign that. And the appendices also confirm that we remain independent of City of York Council. I wasn't going to say anything else, but obviously Malcolm and I are happy to take any questions that you might have.
Do members have any questions? Councillor Rose.
Thank you for the report as always, and it's good to have a decent level of assurance. It's useful to have all the details. My question is on page 20, the misstatement, and kind of just deep diving into what it says there, that there was one item that was 44k that had been identified, and then across all creditors and across all amounts, that's been estimated to then be probably 379 in totality. It could be the only error, and therefore it's only 44. Presumably there are also larger creditors, and therefore it could be a large amount. I just want to get your, what level of confidence do you have that 379 is probably likely, that it's probably that ratio, or do you feel like actually that's the right thing to do, but it's probably likely it's rare? Is there anything we should be putting in place process-wise to reduce that? What's your feeling around that in general?
So I think if I sort of explain to you how our audit process, in terms of when we're testing balances such as creditors, we pick out all the items that are material and we test those in totality. So we know that all the material creditors were correct. And then we test a sample of the residual creditors. So that estimate is statistically based. So we would expect that to be a fair estimate of what the impact would be on the overall balance. Like you say, it could be that we've just picked out one and that's the only one as well.
Yeah, I guess it's statistical, but from one data point, which is why I was curious to know if you felt like there were it was a systemic problem that we're likely to see repeat, and there's something we can do about it, or human error, or that was what I was wondering.
No, I wouldn't say it's indicative of a systemic issue.
And it's a classification error as well, so.
Any other questions? Does that complete your report? Oh, sorry, part B, yes, sorry, carry on, sorry, yes. Carry on, yep.
Thank you, Chair. Yeah, so we've also got the auditor's annual report on there, and this ordinarily would summarise all of the work that we've completed in the 24-25 audit year. Obviously, we're still progressing with the final accounts audit, so it's issued as draft at the moment. As soon as we finish the audit work on the financial statements, we'll issue as final. But it does include our proposed value for money commentary in there, which is the important bit in regard to that report. So at the time of writing the report, we highlighted 2 recommendations relating to financial sustainability criteria, and those are outlined on page 13. These are recommendations in and around delivery of efficiency savings and oversight of your minimum revenue position to carry forward from the previous year, that last one. And then on page 18, we have identified a risk of significant weakness linked to the governance criteria. So since that's in that report, this has been reviewed by our internal moderation panel. So we can confirm that that will move from being a risk of significant weakness to one that we do actually report. And we'll also make recommendations in and around that. So that is still ongoing. The wording of that weakness and that recommendation is still ongoing at the moment. And again, that will have to go through our moderation panel before we can issue as final. As soon as we get that, we'll share that with Debbie. As noted earlier, our audit work is nearing completion and may also lead to some additional commentary or further recommendations. However, I do not anticipate us to be reporting any other significant weaknesses. I'm not going to say any more on that other than ask if you have any questions on that report.
Councillor Rose.
Yeah, again, thank you for the report, and good to have general assurance about many topics, and sad to see a confirmation of the significant weakness. Risk number 1, but it is only one of one, so I guess that's a positive. But already mentioned at the start of the meeting around the detail of that it was approved in 2020 and commenced in 2023, and it's because of the FY25 actions of our Section 151 officer and the internal audit that this kind of came to light the way it did. But there's not much in here in terms of the deep dive. As you say, it's an ongoing thing. I guess you heard the conversation earlier and public participation. Is there anything from any of those points that were raised, anything for our discussion later in this meeting that you think we should be aware of that perhaps isn't written in this, but that would add to what we've got in our internal audit papers? I presume, looking over towards finance and governance directors, that there's no reason that they can't see our internal audit paper, but not during this meeting right this second, I guess. But then we'd like to hear your take on it when that comes around as well. Thanks.
Thank you. Any further questions? Nope. Oh, sorry, Mr. Billy, sorry.
That's all right. Just I think you said that you're expecting to issue a unqualified opinion to the accounts, which is great, and it's worth reflecting that is not a given in the sector. There are hundreds of what's called disclaimed accounts, which is the bad one. So that's a success, and clearly to the credit of the authority and Mazars, because we can't take that for granted. Used to be able to, but you absolutely can't now. You just mentioned a couple of significant weaknesses there. Is the reason why those significant weaknesses don't result in a qualification just down to sort of materiality or prevalence of the significant weakness? It's just not substantial enough to result in any qualification. So if it's hidden in the report, and I just haven't picked up on it.
At this stage, we've not found anything in regard to those significant weaknesses material enough for us to qualify our opinion.
Any further questions? Nope. In that case, I thank you very much for your hard work and your report. Sorry, Councillor Rowe. Sorry,
It's for us rather than for them, but
right.
when we do bring back a paper on the particular topic around Station Gateway, etc., are we able to invite them even if it's not a meeting they're supposed to be at? Because I think it'd be useful to have your input in that discussion. But it might be one of those meetings where you're not scheduled to be with us. So if we can join that up offline, that'd be useful.
And I think our final version of the auditor's annual report will be reflecting on that and probably go to the March committee.
And our external auditors have a standing invite to every meeting, so they can come and go as they choose. So there's an open invite to them at every meeting. And to meet with you in private separately if you so wish to do so.
I mean, a premium might not be a bad idea, actually. Thank you.
If there are no further questions, thank you very much. Moving on, final statement of accounts, page 121 to 332. Patrick's going to take those.
Yeah, so this is effectively the updated statement of accounts following the discussions that we've had with and the suggestions of the auditors and where to make some presentational changes that we've done. As I say, we've highlighted those in yellow. There's very few across the 100+ pages. So the recommendation for the report is effectively to delegate authority to the chair in consultation with the vice chair to approve and sign off the final statement of accounts, subject to the only amendments in the accounts being those outlined in the audit completion report. So obviously, if Ms. R's come up with something fundamental over the next few weeks of the final weeks of the work, we'd bring that back to you. But if it's only in regards what they've already told you about, we'd like to get the account signed off by the backstop date that we've got of February the 28th.
Are you all happy that we delegate that power? Sorry, Councillor Whitcomb then.
Thank you, Chair. Yes, nothing on the report, but thank you for the report. It's just brought up a thorny issue of chair and vice chair, which we have temporary today. Just want to check, monitoring officer, what the process will be. Is this going to go to the Councillor Hollier and Councillor Burton?
It will be Councillor Hollier. I'm only here because nobody else was available
for the chair.
Through the short straw, having to sit here and try and chair a meeting. We had no preparation virtual. But no, it will be Councillor Hollier and Councillor Burton.
Splendid. Thank you.
I was going to bring that up if there was an emergency, but okay. I don't think there's anything further required on that item. Thank you very much indeed.
Can we ask questions on it? On the
Sorry, yes, I thought you.
Oh, God, sorry. No, I've got quite a few. Thanks very much.
Just maybe remind you, Councillor Healy, before we start, is that the committee has seen these accounts before, and so this is just that you've seen the draft, you've approved the draft. This is just the changes made under the audit completion report that you've just discussed that we're here to consider. But that's not to say you can't ask questions about the accounts, you can, and we'll do our best to answer them. But just as a point of reference about the purpose of this committee is just to review the changes made by the audit completion report.
Okay, in that case, it might be very quick.
Yeah, we've seen these several times.
Okay, cool. I'll rattle through them quickly then. So page 145, the narrative report. You've got senior management review and equal pay review. Does this document relate to what happened as of that year, or does it take into account what's happened post that year?
This is as at the 31st of March.
So as of 30, okay, that's fine. That's good. Okay, I don't have any questions on that. Page 152, which is page 25 of the report. The housing revenue account, it seems to have an increase in cost and a decrease in revenue. I'm surprised it's got a decrease in revenue. So if you've got the big paper pack, it's page 152, comprehensive income and expenditure statement, service costs, second line down, housing revenue account.
I think we look at the detail of the housing revenue account note, wouldn't we, Patrick? But without top of my head, I don't know what.
But both have increased.
It's a £1 million increase in expenditure and a small and a relatively flat income.
Well, incomes.
Yeah,
it's like that. Okay, that's fine, all right, so I thought it was a larger drop in income, so on speaker. Yeah, but they've lost a couple of houses. Page 70. So page 197 of the papers, which is page 70 of this individual paper pack, the table at the bottom, you've got a line that says other movement in costs. What is that? Because that's quite a lot of money. So just an explanation of what other movement in costs is. Again, if you don't know, just say you don't know.
We can come back to you. It's effectively what we value our highways at. So what you would actually do otherwise with your highways than operate roads, but we're required, as per the regulations, to make an assessment as to what the value of that infrastructure actually is, so our roads and our pavements. So what we do each year is we look at what investment we put into those that asset, how those assets have depreciated, and we agree a figure in terms of what to put in the balance sheet. We don't particularly plan to sell any of our highways or our ways, and whether if we did
I would have
that,
thought you would do.
if we did that, we would get to this particular number.
Okay, no. It's well, no, it's just that you have your net book value, which has increased, which covers what you just said. You've got additions, so I presume that's work undertaken in year. Depreciation, again, what you just had. So you've covered off all of those things at separate line items. Other movement in costs, just send me an email.
I'll send you an email with the details.
Send the committee an email. Because does anyone else know what it is? No. Page 99.
What's it? I've got it in yellow.
So page 226 of the pack, page 99 of the individual items. Expenses for senior officers tends to be really, really low. Is that so? Are their expenses paid by the officer that they claim back, or is it expenses for them to complete their job?
It would usually be travel expenses generally. I think it would be expenses that if I went to a meeting in Leeds, I would book a train through the booking system, that would show up as expenses under my detail. So it would be expenses for travel. If you went to a conference overnight, and highly unusual, and I would want to know exactly all about it, going to overnight conferences, but train travel. So it's expenses that officers have either claimed back or have incurred through the travel booking system.
These are payments that have come through the payroll system, so it's possible that if there was a train ticket that was booked outside of the payroll system, that's not included in this. This is where they've claimed it through their payroll. And
thank you for the clarification, because I was just going to say it's really low.
Yeah. Can I just say something? Part of the confusion, I think, of what is happening here is the fact that on the computer, these changed it in yellow, but they're in black and white on these. So and I can't read the computer, since I think there are others who find it difficult to manage these very large documents. So that perhaps accounts for why some people are asking questions. It might not have been.
It's also fair for people who don't sit on the committee that they haven't seen them before to spot things that the rest of us might not have. But I was just looking at why £600 of expenses across all of our directors was being picked on, but it's because you're saying it's a good thing. So, but yeah, it's a very small amount. Thanks for highlighting.
Cool.
Any further questions?
I've got a couple more.
Okay.
Literally a couple more.
Yeah.
Okay. Trying to knock through them as quickly as I can. So page 257, page 130 of the pack, sort of relates to what we've just asked. So the answer is probably the same. Contingent liabilities. Are we saying at the 31st of March we were not able to put an estimate on the
yes
time? Okay, cool. Okay, excellent. Page 143. Page 8, explanation of decrease. So right at the very bottom, so this is the HOA account, which again, if you don't know the reason, there's been quite a big drop in the surplus of 3 million from 8 to 5. 270 of the pack, 143 of the individual paper. Is that a trend over time that we're seeing, or was that a one-off yearly drop?
Back in 2013, I think it was, we undertook what was called self-financing of the HRA, and we took out £121 million of debt from central government to take ownership of our cash flow of HRA. So prior to that time, we were making payments to the government each year based on what they thought York would make as a profit from its, or a surplus from its HRA. From that period of time, we took on all the income. What we are now in the process, when we took that £121 million worth of debt out, at that time, we timetabled repayments at long times in the future. Well, we're now at those long times in the future. So each year we're repaying elements of debt. So depending on when that payment is made, it's effectively reducing the balance on the HRA for that particular point in time. But we had built up a surplus to allow for this debt to repay. So the in-year position might show an increasing deficit, but actually that's all been planned.
Okay, so projecting it into the future then, are we likely to see a steady decrease in the HRA surplus?
It will depend on what loans are being repaid at any particular point in time each year, because they were quite lumpy, some of when those loans were taken out. It was just to spread the risk of the interest at that particular point in time. We will make a decision each year whether to refinance and continue the borrowing or to repay the debt, and it will depend on the status of the HRA.
Okay. And that's me.
Anyone else got any? Nope. In that case, are you happy to accept the recommendation that we delegate to the chair and vice chair to sign off the accounts, or the chair to? All those in favour, please. Okie doke. Thank you for that. I'm glad I don't have to mark your homework, Councillor Haley. I really am. Okay. Treasury Management Monitor 3. How are you taking this, Debbie?
Yep. So well, I would say as members are aware, but because we've got a few substitutes tonight, you might not be aware. So it's a statutory requirement to report to this committee on treasury management activities. So this is the Q3 report for the current financial year, and it outlines the treasury activity during the year to date. So you've got a brief government report actually, but the main report is the executive report that they considered at their meeting yesterday. So it just sets out an overview of the economic position at the time of writing. It's probably already out of date because these things tend to be. And it just then goes on to just give you details of any loans that have matured, any new borrowing undertaken and that kind of thing. So as we've said before, we continue to closely monitor inflation and interest rates so that we're trying to minimise our risks, but there's nothing of particular note to draw to your attention.
Any questions? Councillor Whitcroft.
Thank you, Chair. When I was on this committee last, I used to ask all the time about interest rates, and I'm sure we've all missed that. But I just wanted to check page 340.22, just around the average rate being on return in the fixed term and the call and notice accounts. It's set at 0%. I'm not sure whether I'm missing something there.
No, that's because we don't use them.
Not at all.
No.
Oh, so it's not like we have the hypothetical ones.
Sorry,
okay, we just set it
average
completely
rate
zero.
of our holdings
Right.
rather than the average rate of those funds. Sorry,
Got you. No
to make
problem.
that bit clear. So.
Thank you. No, it's fine. Right. Thank you.
And it seems that you are basically just taking very short-term loans at the moment in the anticipation of falling interest rates, which is a totally logical way to proceed.
We are during this quarter actually. We've just been discussing today our strategy, and so we will start to take out some kind of loans up to 5 years now, because that's the best PWLB rate at the minute. So we're just trying to spread that out over gaps in our maturity now.
Can I ask you a question? Why does the PWLB rate seem to be higher at 25 years than it is at 50 and 10? I don't quite understand the logic of that.
Yeah.
I might be able to help a little bit. It's known as a negative yield curve, but essentially the longer term you are holding an asset for, say, 50 years, you actually are more likely to, it's more likely to be safe than it is for a short term period, because you will smooth out the economic ups and downs over the period.
Well, that's educating me. Thank you very much indeed, Councillor Cross, because it was something that's baffled me for quite a while. I thought I'd ask it. Thank you for that. Okay, are you happy to receive that report? Oh, sorry, Councillor Pete, sorry.
Missed it. In the pack of papers is page 354, which is the third to last page on Annex A, which is Prudential Indicator 4, ratio of financing cost to net revenue stream. So there's one for general fund, there's one for HRA, and it gives a total. The HRA one, no, he's gone. I can understand what Patrick was saying about refinancing the debt. Oh, it's fine. I was going to pay you a compliment, basically. So I can understand why that's on a sort of downward trend, because we're now actually starting to repay the debt, which is very prudent. I'm surprised we weren't doing that before. On the general fund, though, we're currently 25-26, 13.8, which is, you know, it is what it is. Then there's a big jump the year after, and it's gradually increasing. So how I read this, our debt to income is gradually getting bigger and bigger and bigger. And I wouldn't have said that was sustainable.
It's York Central, isn't it?
York Central is the main one, the £35 million that we are going to be contributing, expecting to be contributing to the enterprise zone, York Central. That's obviously a very significant set of borrowing. In itself, it's being, or it should be matched by revenues that we're making from business rates, receipts that we get from the site once it's up and running. So that should ultimately be paying for the borrowing. But we've always acknowledged that there's likely to be a short-term gap when the infrastructure is being built in and the commercial activity is not there at that particular point in time. But broadly, that statement takes the figures that are in the agreed capital programme that council has approved, which incorporates the amount of borrowing that's required to do that. So we have a quite significant capital programme over the next 5 years, and that's the impact that potentially has.
Okay, that raises probably not a point on here, but a kind of sort of slightly broader point. Is our capital programme too big if it's crowding out this large amount of revenue, given the fact that I know the revenue budget is significantly under strain?
You could have a debate about it. It's not, you know, these prudential indicators set out the limits, and so it's not too big. We're significantly under borrowed at this stage. You are right, however, we would note caution. But because of the way the prudential indicators are shown, it kind of shows like a bit of a worst case scenario almost. So by the time we get to 28, 29, it probably won't be 18% because we will be getting the income from the enterprise zone. So this shows the kind of borrowing based on like today's budget, doesn't it, Patrick, really? What we haven't included in the budget, we haven't then said, and actually we'll get income from the enterprise zone that will repay that borrowing, because what we're showing here is a bit like the worst case scenario to just show what our total exposure is. If you were to then, when we start to get the income, as Patrick said, there will be a gap. So we will be at this level of exposure for a period, but then the income should start to come in from business rates within the enterprise zone that will repay the borrowing and that will reduce our exposure. But from my point of view, and Patrick's as the 151 officer, that we wouldn't want the council to commit to another £35 million of borrowing, for example, on the basis that that was always also going to be repaid, because you're exposed to this 35 million, and therefore by showing it this way, we're showing you what your level of exposure is, because then if you did another 35 million, we'd want to see that first chunk repaid, if that makes sense.
Yes,
so that's just why we show it that way to.
Okay. Yeah, makes sense. But yeah, it's just, I'm concerned that we're getting to the point where capital start to crowd out revenue.
I mean, we've got a significant capital problem. We haven't actually added that much to it over the last few years. So this is probably a historic issue, actually, the level of the schemes that we're delivering now were decisions made, 3-4 years ago, for example. So it just takes some time for this to kind of filter through in some respects. So you're absolutely right. It's the one to keep an eye on and to make sure it doesn't get to the point where all our budget is social care and debt repayment. which is the risk that we would run if we don't keep an eye on that indicator. Yeah.
Can I just ask, I mean, clearly we're anticipating that York Central will come on stream fairly soon. I mean, obviously that depends how quickly it's actually developed, and it also, to some extent, deals with how quickly people build out what they've got planning approval for. And the third thing is, it could be a problem if we have an overspend on it, if there is an issue. Have we had any indication yet that any of those are a risk?
I don't know whether Gary or Patrick can answer any of those questions. I can't.
Well, Homes England are leading on the project.
Yeah.
And Homes England need to identify the funding for the project. We have committed funding through the West Yorkshire Transport Fund, which was part of the council's contribution, and also the £35 million from the EZ and some other small minor from the £10 million budget that was agreed. That it is, as I say, it's for Homes England to identify the funding. Our funding agreement is such that Homes England have to show to us that the scheme was funded before we'll pay the money over. So they need to convince us. So it's not that we'll give the 35 million and then the scheme will fall because they haven't identified enough funding. So they've got to do that on our behalf. So that's de-risked it from that perspective. But there is ultimately a risk of how quickly, when the infrastructure is completed and how quickly it's built out. That's always been a risk, and that's kind of what we've accepted.
And are the indications that the scheme is on course to be developed as we expected? Yeah, Gary, if you could.
Chair, I've just minded of the microphone. Well, they're in for planning, so they're on programme.
Right.
So, and detailed conversations are taking place in terms of the phase delivery within that. Obviously, it is dependent on demand for the office space, but again, conversations are taking place positively in and around that. There's been recent announcement in the last budget in around the government office provision, so that's positive in that respect. And there are conversations taking place in and around the innovation. Obviously, a lot of those from a market perspective are dependent on planning, so they're ahead in terms of getting that planning in place. So then they've got the offer to the market. So it's positive in that respect.
Good, thank you very much. Any further questions on the Treasury Management? Councillor?
Yeah.
Yes.
Chair, is there a guarantee that the government won't change the percentage of receipts we get from business rates from the property?
All the changes that they've made to the business, all the changes that they've made to the business rates, they do revalue it, but they stick with the commitment that was signed up at the time that the EZ agreement was made with government. So they've stuck to all their commitments, and so we're still getting 100% of business rates to the period, and that's been consistent across all these EZs across the country.
Any further questions? Thank you. I think we've been going an hour and 10 minutes. I think if you would like to take a very short comfort break, are you happy with that? Sorry. Yeah, happy to agree that report. Good, okay. Right, there we go. Right, we'll now reconvene at 10 to 7, if that's okay. Hey, ladies and gentlemen, if we can move on to the next item on the agenda, which is Treasury Management Strategy. You taking this one again?
Yes, thank you, Chair. So again, this is another statutory report. It's required by the Prudential Code. It's here for you to consider in your scrutiny role. It has already been considered by Executive yesterday and will be going forward to full council next month for final approval, subject to any of your comments today. Again, there's no significant changes really to the strategy to bring to your attention. So it's sort of business as usual, really. We haven't made any significant changes. The report just outlines the prudential indicators for the year ahead and outlines, you know, a forecast really for the next 4 years in terms of what we think the Treasury position is going to be.
So you've read the report. Any questions on it? No questions. Good. Right. Are you happy to receive the report and approve it? Thank you. Okay, moving on. What's next? Key Corporate Risk Monitor 3405 to 452. This is a standard item to look at key corporate risks, or virtually standard, but we have got a deep dive into key corporate risk 7 on this one, which was asked for a few meetings ago. David. Okay.
Good evening, Chair. So yes, this is Risk Monitor 3, 25-26. The purpose of the paper is to present to Audit and Governance Committee an update on the key corporate risks for City of York Council set out at Annex A. The policy basis around this is the effective consideration and management of risk within all the council's business processes helps to support the administration's key commitment and priorities as outlined in the council plan. Just going through the paper, set out at paragraph 6, 7 and 8, it makes clear that there are a number of risks, of varying risks at different levels across the authority. The focus of both corporate management team and audit and governance is the key critical risks. These are the risks that are outside of our risk appetite, for want of a better term, whose consequences, should they occur, could be catastrophic. We call these key corporate risks, or KCRs, as we're aware. There are currently 11 KCRs as set out at Annex A. In terms of good practice, normally you would have 8 or 10 KCRs. We have 11. Just in terms of delivering the local plan, that was taken out primarily because at the point it had been delivered, and the issue about whether there was any subsequent risks from delivering the local plan, that's still to be discussed. There's a CM2 risk session next month, so we will just try and clarify if there either is or isn't any others to come forward, but there would need to be key corporate risks in terms of the impact, should they occur, would be relatively catastrophic to the authority. It's not so much an issue of if we have 12 and we lose one, we need to bring another one through. It's more if we could get rid of all 11, it'd be very good. But you can see from the content of the 11 risks that's in there, that's highly unlikely to happen. The overall risk ranking of the KCRs changes little over time. As I said, that's really down to the fact that they can't be eliminated in totality or controlled to the extent we can turn them to green risks and remove them. While the rankings change very little, the controls and actions within those risks do change. And in this paper there, those actions are set out at paragraph 16 to 19, where there are being changes. What I would say is risk management's a good management process, which probably all organisations or nearly all large organisations undertake. The actual ranking of the risk, because listening to the discussion earlier, uses the matrix that is set out, I think, at Annex D. It is a little bit of an art rather than a science. In other words, you're not keying data into a system and getting an answer. What you are doing, you're looking at the risks and the controls and making, I guess, an informed decision about how that risk ranks. So when controls change, it's the perception of those changes and the expertise of the person who owns that risk making a decision using that matrix about whether that risk is orange, red or green. Okay, so the risk owners really understand that risk in totality and they can make that decision and they can look at those controls and do that. So we could add 20 controls, but it doesn't mean it would reduce the risk. They should just be there. But equally, we can change those because the risk changes over time, but that may reduce the risk slightly or it may increase the risk slightly. And of course, a lot of things are outside of our control. So there's a lot of external things feeding, especially when the focus of this report obviously is KCR 7. Things like interest rates, etc., depending on what's happening within the world and the crises that's going on, cost of raw materials, etc., have big influences on that. They're outside of our control. We cannot actually control them at all. We can contemplate what might happen, but you can't stop the cost of steel going up as it did during the COVID crisis. So you can never totally control the risk. You can just put in there the issues that you need to consider. In terms of paragraph 16 to 19, these are the changes that the risk owners make. They're not my risks. They belong to the risk owners, which are normally the directors and CMT. But I'll always try and answer any questions around those changes if I can do. What I would say, there's two key changes in paragraph 16 to 19. One's around KCR 2 governance and one's around KCR 3, which is effective and strong partnerships. Certainly around the case of KCR 2, I can explain what those changes are. We share a great deal of data with the NHS. The NHS have their own security requirements. Obviously, cyber security is a big issue at the minute. If they increase their cyber requirements, for us to continue to operate and exchange information with them, we have to up our cyber arrangements to make sure we comply with their request. So that change in KCR 2 is really about just increasing our cyber security to ensure that we can still operate by continuing to exchange data with the NHS. And KCR 3, it's really the changes reflect the financial pressures currently being experienced within the Integrated Care Board. So they have financial difficulties as well. So it's really about how we mitigate any impact that they may have on CYC. In terms of tonight's detailed KCR, you did request back, seems not that long ago, but it was the 30th of July that we brought this risk forward. So it's a capital programme that is the risk this evening, which Debbie will go through. If you have any questions on what I've just gone through now, I'll take that now before we move on to the detailed risk.
Shall we just do the general risks that they leave 7 out for the moment? Any other questions on any other key corporate risks? Councillor Rose.
Yeah, I mean, it's kind of heavily tied to the KCR 7 stuff as a they kind of match each other in some respects, because it's about KCR 1, which is, I guess, the non-capital financial pressures that we have as an organisation. The last one of the actions on the risk actions was respond to the fair funding review consultation. Latest update on that, I guess, is that the outcome of the fair funding review was not positive for us. So direction of travel unchanged is I'd question. I'd be interested to know what we think that based on the current trajectory will look like in 10 years, because I think it is not good, and therefore we should definitely be considering whether the current likelihood and impact are appropriate. But I guess just to slightly pick up on something that was said in public participation by Gwen about the kind of the gross and the net. It's not what it was previously and what it is now. It's about that would be the risk if we didn't have all these controls. So we do have these controls in place, but when it comes to that item, are the controls sufficient for the fact that we just don't get enough funding from national, and that funding is not increasing sufficiently to cover our statutory costs?
You do get information in front of the settlement, so there's information always coming out about how it's been calculated. So we all know there's more basis on the multiple deprivation indices and this kind of thing. So you can assume that that's not good for a city like York, where we now have no neighbourhoods in deprivation. That allows an estimate to be made of what's the best case, worst case scenario. So whilst the settlement maybe wasn't brilliant, it was also anticipated that it might not be good. So the whole point of the budget process is to calculate how bad it's going to be, take a more sort of pragmatic view, and if it's a better settlement, then that's good news. If it isn't, we've already calculated what the impact's going to be. projecting it forward over 10 years is problematic because they changed the formula. Well, if there's a change of government, the formula may change again. So you don't really know whether the direction of travel will be the same. But if you look back, and that's the thing about this, isn't it? If you look back, the direction of travel has been pretty much the same for the last 10 years, hasn't it, in terms of cuts? So it's just more of the same going forward, and your controls really are the budget process in terms of how you manage that. But Debbie might have a.
You're right, Councillor. The fair funding review wasn't good, but it was as expected. So it wasn't good, but the medium-term financial strategy reflected what we thought the fair funding review would do. And those of you that have been around long enough will know that I think for the last 10 years in our budget reports, we've been writing about the risk of the fair funding review and how it likely was going to have a negative impact. So I don't think it changed the scoring because the scoring is based on what we knew and it was as we expected, if that makes sense.
I guess my question is about the timeline of that risk. That at what point does it stop being probable and major? It increases in probability and increases from major to critical over the years as you get closer to being in more significant financial challenges than we have been historically.
But look, if next year at this time,
when does that change?
If next year at this time we haven't delivered our transformation savings and we haven't resolved the current overspend position in adult social care, then you're absolutely right, that might change. But at the moment, we've got work in place to mitigate and plan for those. Obviously, I can't guarantee that every saving is going to be delivered, but we will review it. And at the point that it became unmanageable, that's when we'd be having much more serious conversations around the council's sort of financial resilience. Yeah.
The situation is that we are to some extent hostage to our demographics and hostage to the success of the NHS in keeping a lot more people alive a lot longer to require more adult social care. And we have a real problem with that. And it's a question, because that is more or less a statutory thing which you have to deliver. How much longer can we squeeze the lemon before all the juice runs out? I think we have the second lowest spending per capita in the whole country now.
We will by the end of the 3-year spending review, and that's the other challenge with. I mean, we're feeling grateful that we've got a 3-year settlement because we've had a 1-year settlement. So the prospect of being able to predict. So we obviously within adults, and we do look at demographics, and so we do all that work within public health as well around what's the aging well and what's the health of the population and how all that's going to look. Translating that into a financial impact is a bit more of a challenge for us because what we're trying to do is constantly do the intervention and prevention work. That means that's not, this is what we forecast, what we're going to do to stop that forecast becoming a reality. Yeah.
Thank you, Councillor Merritt. I think you're next then, Mr. Biddy.
Yeah, thank you. You mentioned that there was going to be some further discussion on the local plan at the, I think you said the next month's CMT.
Yeah, we've got a CMT risk session. So because this issue's been going on since July last year, I just wanted to clarify at that session whether there was anything to bring forward from delivering the local plan rather than actually.
Yeah, I mean, at the end of the day, whilst the local plan was an important milestone in terms of getting that in place, it is only a piece of paper.
Yes.
What is important about the local plan is actually that it leads to the delivery of the levels of housing, the range of housing, it delivers the range of employment and all those other facilities. And whilst they, at the end of the day, the council is not solely responsible for them, the private sector's, in effect, in the driving seat for a large chunk of that. Nonetheless, in terms of us delivering for this city and ensuring this city has a good, prosperous future, it is absolutely vital that that local plan is effectively delivered. I am loath, unhappy with having seen it disappear out simply because we have produced a piece of paper.
No, I understand that. The reality of this is if it's whether that director and that area wishes to or perceives it as a risk. It could be it is a risk, but it could be that because they've got the plan and they know what they're doing, they've got the controls in place, it's a green risk, therefore they don't feel it needs to be put into the KCR. So
we can ask Gary to come to the table because Gary's because
Sorry,
I think from a management point of view, I think we're of the view that the issues that you described, Councillor Merritt, will be covered. We've got a KCR around failing to ensure we have resilient, cohesive communities. We've got lots of other different issues. So I think I'll allow Gary to.
Through you, Chair, and the reason I don't think it's a risk in respect to a corporate risk is actually it's pretty much totally out of our control. We can't make developers build. I am notwithstanding that we will be working with, and I am, and my teams are, and the council are working very closely to push these sites for delivery. We don't corporately have any direct mechanisms to actually make them build. So I'm not sure how we can then see that as a risk. And then how do we respond to that risk? Fundamentally. Notwithstanding it's important, incredibly, I completely agree. And we'll do everything we can to deliver it.
But we are hostage to the fortune of the developers who will develop when they feel the economic circumstances are appropriate and when they can sell their houses.
Yeah, fundamentally, Chair.
I'll take Mr. Binney next. I think you were next.
Thanks. I may be misreading the scores here, but my understanding is gross impact, standard sort of, gross and residual score, right? Gross impact, high, you do loads of stuff and then the risk goes down, but fully recognise your point that you can't terminate most risks. You can just kind of bring them down or treat them. Half of the risks are rated 20. I don't want to get stuck up on the ratings too much, but the kind of major rated as 20. And then we list, say, 20 mitigations or controls to bring that down. Half of the risk go from 20 to 19. So my instinct is that there are two scenarios. Either we're doing loads, which is completely ineffective because it's just gone from 20 to 19, or I think perhaps the more likely scenario is we may be underestimating how effective those controls actually are. Because if we're investing, again, I may be misreading this, but if you've got half the risk, about 5 risks, going from 20, doing loads of work to control them, to bring the risk down, and it goes down to 19, that suggests that the internal controls just aren't working, aren't budging. And I think, I suspect quite strongly that the controls are actually doing more heavy lifting than reducing it by one score. And then just to take governance, for example, so this is with my government hat on. When I've been involved at the local level for kind of failures, it always starts with governance. So that's just the bit that jumps out. When I worked on Slough, Thurrock, Birmingham, Croydon, Liverpool, whatever, it always starts with governance before an authority just slides. I don't think York is in that scenario whatsoever. But we're saying that governance, which should be on the register, we all know how important it is. Risk of 20 if it's just left to its own devices. We have a decent governance structure. It could always be better, but it's decent. We list 20 controls and we're saying it's now 19. I suspect that's perhaps underestimating the effectiveness of control. Am I reading that right?
It could be, sorry. It could be, as I said, it's the risk owner's view of where that risk lies after applying those controls. So those controls sometimes will not eliminate the risk. And if it's only brought it down by one, in their view, it's a risk that's probably not going to go away. It's difficult to bring it down to be a green risk, and therefore they need to do those to bring it down or to control the risk. But it's their perception of how much they've reduced it by putting them in. So I couldn't, if you're saying to me, is that wrong or is it right? What do I think? The answer is I can't give you an answer to that because I didn't put those controls in.
Because it's the risk.
I don't know how much impact they have in that area.
I completely understand.
And I don't want to give a view, so I've got to accept what the risk owners are saying about those risks. And I bring the reason to come here is for that scrutiny, isn't it? To make sure we're managing it. So if you felt in governance with some specific controls you felt were wrong, we could always take that up with the risk owner and say, well, A&G are asking why it's fallen by 1 point. Yet you've got 10 controls here. What are these controls doing? Why isn't it being done? Well, we'll certainly follow that up if you wanted us to get an idea as to why that's the way it's been scored. But I can't answer you in tonight as to why it's like that.
I understand. Sorry, can I just come in on that just really quickly? Yeah. I completely understand. The risk owners own it. Clues in the name. Yeah. I understand. I think it might be worth kind of pushing back on it because although risk owners own it, the risk management framework is bigger than them. It sort of strikes me as perhaps a cultural point. Then, if we've got owners across different areas of the business, I just think if you're the governance one again, not to focus on it. If we're saying it's 20, which gross impact of 20 basically means let's not do anything on governance and it just be a, you know, we won't try at all. The authority would obviously run itself into the ground in a couple of months. That's not the case. Everyone puts in control arrangements around governance, and then it comes out 19. I just don't buy it. There's so many controls there. It can't be 19. And if it is truly 19, don't bother. Like there's so much work in there, and it's not changing the diet. So I think just a bit of challenge to risk owners, I think, would be helpful, because there's so much work there. I think officers are perhaps underestimating their capability in the work that's been put in.
I think we can take that away at the CMT risk session. I take your point. I think that certainly with the governance one, I mean, Bryn might want to comment as the risk owner, but I think a lot of that is around the increase in risk of the cyber security issues. And I don't think any of us feel like we can completely like eradicate that risk. And so I think there's some things about we could do loads and loads of work, and we have to do loads and loads of work, and we have to keep doing it. But there's a recognition. It's a bit like a kind of you know, a terrorism event, isn't it? We can put lots of things in, but you just absolutely cannot rule things out if somebody is determined to do something. So I think you're probably right. It's a combination of the two. It's probably a bit of overcaution on officers' part, but also maybe just a recognition in the description that some things will always be a risk.
Of course.
So it's about our risk appetite, I think. So maybe we can take that away and just do some work on that.
No, thank you. No, I completely agree. I think, you know, you've got controls here. I would never suggest that therefore it's 0. I just think 20 tons of work and now it's 19. I don't quite, I think it might just be a risk aversion, if that makes sense. Thank you.
Councillor Orrell.
Thank you, Chair. Just coming back to what Councillor Merritt was saying earlier, I completely agree with him. And whether it's our perception of what risk is, I'm not sure, but there is a definite risk to the people of York if the local plan isn't delivered, and I think that's what we're here for. So I think I don't know whether we can put it on a risk register, but it certainly should be a risk that we're looking at all the time. And we need help from national government as well. We've got a planning act going through Parliament that puts all the emphasis on councils delivering planning permissions and no emphasis on developers actually delivering the houses. We all know around the city where developments have got permission but aren't being delivered or haven't been delivered. And yeah, I think it would be good for the council to keep this as a risk to the council and to the people of York. So maybe a wrong definition of risk.
No, I think we'll just remind that we're not saying it's not a risk. We're saying that the completion or agreement of the local plan is not a key corporate risk. The implications of not having or not agreeing the local plan, and Gary can come in and correct me if I'm wrong, are reflected in the other areas. So it will be a financial risk. It will be a risk to our communities. It will be a risk that we're not responding to changing demographics. The not having an effective local plan means we're not effectively responding to communities. We're not effectively dealing with changing demographics. We're not effectively managing the finances. So we're not saying it's not a risk, and I'm sure Gary's got it on his directorate risk register. We're saying it's not it's not a standalone key corporate risk, because the impact of it is seen in all the other key corporate risks. So we're not saying it's not a risk. We're saying it's not a key corporate risk because the impact of it is already covered in the key corporate risk.
Somebody over there had the hand up. Nobody over there? No. Right, Councillor Healy, yes. Oh, sorry, apologies. Right.
I hear what Debbie says, but shall we say, given its importance for the city, trying to find little bits and pieces buried in other corporate risks is probably not the best way of facing up to it. And in terms of Gary's argument, well, it's in the hands of the private developers. So is most of social care, most residential care. Lots of our other services are very much in the hands of the private sector. We're very much in the hands of the private sector for developing. So that's not been a reason for not identifying the risks for us in terms of what we deliver as a council.
I think it's probably the risk is more that developers don't deliver the housing in the local plan. End of story. We've done what we can right now, and we're now at the hostage to fortune. Councillor Healy.
I don't need to ask a question, as I've just where the fact is at December 2025.
Jolly good. That's interesting. Any further questions on the other corporate risks? If you want to now move on to the specific key corporate risk 7, the capital programme. Anybody got any questions they'd like to ask about that? I have one as well, but.
Thank you very much for the paper and the detail. Obviously, it's also in various other papers tonight through various other similar lenses. I guess I just wanted to formally raise what was raised by Gwen in public participation around. I understand and I agree, obviously, with the concept of we've got a risk of a certain size. We put loads of controls in place. The risk is less because of those controls. But do we feel, given everything that we've seen so far from internal and external audit and what we know internally, do we feel that that is an accurate net likelihood and net impact? I know that it says trending slightly worse on the key corporate risk, and there's a lot of detail in the paper attached to it, but what's our level of confidence in that kind of net score?
Two things. One is that some of the things that discussed tonight, including some very well said, is a program which obviously does feed into the capital programme because it's funded in that way, I'm not abdicating and saying we don't have anything to do with that risk, but in the key corporate risk, we don't deal with project risks. They're dealt with separately through a separate process. So I don't see those. But that should be, you're right, it should be taken into account in terms of there's a capital programme at risk because something's overspent or interest rates are going up, we're overspending. And that again, I mean, that's up to Debbie in terms of how she perceives that is creating a risk with the overall capital programme, and that's the high level. So that's across everything that we all the projects are running through the capital programme, not just one, although admittedly it's a large project. Again, it's a difficult one, isn't it? Because it's almost like, you know, if we're spending £100 million a year and 20 million's quite at risk, but 80 million isn't because it's controlled at the high level and look at the overall capital programme, it might not have as big an impact as what we think it's going to have. But maybe Debbie can answer that better than I can. But
yeah, it's a complex one. I think the risk is accurately scored. We are, as Mr. Binney said, we're doing a lot of work to mitigate the risk. And as I'm sure Gary would say that all capital schemes have risk inherently. It's a very it's a very risky area. So I think that the work that's been done in terms of monitoring, the work that Gary's doing in his team to bring in the additional staff, to upskill staff and so on, all add to our ability, you know, our confidence in the score. Was that your question, whether or not we had confidence in the score? Sorry.
Oh, yeah, that was the first question I've asked, yes. If I can continue, that's all right.
Yep.
Yeah, I guess that was trying to feed through the question from participation is, given all the things that we've seen more recently, do we feel that there's, you know, we've acknowledged that there's a trend upwards in the risk, but we haven't changed the scoring upwards? Should that be a consideration? I guess I'll keep comments short because this could be a huge conversation. I know we are going to bring it back, and Gary, if it's possible to get a bit more flesh around what we've got in the extra paper here, where there's like one sentence on us describing stuff, but actually I think it's quite pertinent to what will come back round. That'd be really useful for the next conversation on major projects and capital programme in general. But I do have a lot of concerns, not just related to the capital programme, but you kind of mentioning that there are things on project risks logs that are this level of significance that might not end up in attached to that key corporate risk and reflected appropriately. And the absence of knowledge of those risks is such a big risk in itself that it is pretty substantive. And I kind of Groundhog Day going through key corporate risk register every time I've been on here for the last 3 years, that I end up just coming back to, I don't think we do risk management right in this organisation. And I'm speaking as a risk management specialist and professional by trade. I don't like having the conversation of, well, we're not sure about that, therefore, well, that's the point of risk. If you're not sure about it, it's a bigger risk. And you know, the capital program sits in that space for me at the moment. I know that we have done a lot with the PMO space. We've done a lot with, you know, scrutinizing in greater detail since we started having more emergent stuff. We know that the biggest problems are isolated to one specific project, and the likelihood of that happening for some of the other massive things like, you know, Ring Road and Haxby Station, all these other things is less likely because we are keeping a greater eye on it and we are doing better. But there's a lot of uncertainty that sits on me, and when it comes to risk management, that uncertainty is the point of risk management, and I feel like we are lacking more confidence and certainty in where we're at and where we go and how good we are in that space. But I think the conversation is for when we get a bigger paperback and talk a lot more than that. But.
Just to try and answer that, what I would say is risk management in the council probably started just around the turn of the century. I can't believe I'm saying that, but that's true. And to be honest, the original risk management program, I've just come back to risk management. Okay, I've been doing other jobs within the authority. I'll pick this back up, but all the stuff that came through in the KCRs and the way we do it came from what I set up probably 25 years ago, 26 years ago. The reason I'm saying that is, having come back to it, I would say risk management is more embedded in this organisation than it's ever been. Whenever I now go to project board, they use project management tools. The first thing you do is start to discuss the risks and the project log and how the risks have gone up and how they've gone down. So what I would say is risk is well embedded. It's discussed. It doesn't always rise up into the KCRs, how much work's gone on below that and how risks has been discussed all the time. And I also think that sometimes when that risk is discussed, people don't understand that if it's a really serious risk, they should be raising it up so it gets into the KCRs. And that's partly because, well, there isn't even a full-time resource for risk management. It's just something that we keep the framework going. The risks are owned by the risk owners, and we bring it forward. But I think it is far more effective here. And you can't prove a positive and a negative or whatever, because we don't know what we've headed off and what's happened because of what we've done. But I can assure you, because I've sat out of this for 15 years maybe, everywhere I've gone and projects I've got involved in, they do manage their risks. They do have their risk logs, so you can go and you can see them. There's masses of paperwork around what's done, not always collected in a way that you can see it. It's sat within the project, and the project manager will keep that risk log. But I think we do very, very well with it. It's difficult to articulate when it gets to the KCR level though, because it's so big and there's so many factors, as we say, feeding in. What we try to do is to get somebody to attend at least quarterly each directorate's management team to go through their risks and make sure that they are managing their risks. And it's like anything else, we all think that we are. Like when you go across the road, you look right, you know, it's natural that you consider those risks. I think we are more risk mature. I think we do it automatically, but I don't think we always understand what the implications may be and when to raise it and when to reduce it. But the whole point of why this has been set up in this way, that everything comes to yourselves in order A&G, is that you can query that. And if it looks like we're not doing something, even if we are, then we need to think about how we do it. So I think it's very good compared with where it was. But as you'll know, being in risk management, you're managing the uncertain. You don't know what's going to happen. And good risk management, nothing happens. But if something does happen, you could have managed it really, really well, but it still fails because, I don't know, interest rates rise 20%. So all our capital programs all go bankrupt. We can't afford to pay them. We're in Section 114. We couldn't have influenced that, but it's there. It's flagged. It's flagged in the risk that interest rates are a big impact on our going up. Have a big impact. I suppose coming down they would as well. It's there that it's having an impact on our capital program. So I think it is instinctive and done, and it is registered. So if it's not coming across that way in the KCRs, then I'm not quite sure how we need to put more context into them.
Is it
just a tiny addendum, and then I'll shut up for the rest of the item. But look, I've got a lot of compliments to give a lot of people in the council. There's a lot of people who do really good jobs, and risk management is embedded at all levels. I totally agree. There is a lot of good risk management going on in places. There are connections between different levels of the organisation. From a how risk management was done in 2010 best practice perspective, we're excellent. But we aren't in a positive change management space. We're not in a change enablement space. We're not in a place where we're looking at risk management in the way that best practice says we should be. We're not really looking through a 4 lines of defense model. We're not really looking at the right ways of measuring. I mean, even using the numbers, the net scores of kind of 13 to 20 is just not really how it's done now. And we don't have a centralized risk management tool set that links the bottom to the top and allows those to bubble up automatically. We don't use AI. We don't use anything that's in that space. That's my kind of bigger concern around risk management. And the consequence of that is that things like this happen where this big risk was only known about because we did an audit on it. And that was only because, you know, Debbie and people got directly involved, and the consequences we find that this tiny risk that wasn't a KCR and wasn't known to us has actually had significant consequences for the entire organisation, and that's probably because of the way that we do risk management. There is a lot of good. I will shut up there, Chair, but though I think there's more we can do in that space.
Yeah, no, that's fine. I understand.
Councillor Healy.
Thank you, Chair. Probably a question for Gary again. Do you want to come up here?
You can just stay there.
Yeah, I would do if I was you.
It's going back to the public speaker, why it's gone from red to yellow. I think it's because we now have a bit more understanding about what this is trying to convey. What I'd ask to Gary, given the fact this is the corporate risk register, December 2025, there's between yourself and Debbie, a lot of changes have been made, as is articulated in the final paragraph of column, prior to December 2025, but your direction of travel is slightly worse. I would have thought, given that a lot more controls have been put in place, that should be slightly better. Why have you given that a slightly worse?
Fundamentally, it reflects the outcomes of the audit work. So it reflects what we now know as an organisation. But it's only, we are, and myself and Debbie and others are working very closely to address all the elemental parts. But until all those parts are addressed, it can only be at this current stage in terms of how you manage risk, potential mitigations. Until we've actually actioned those potential mitigations, you don't score those higher because they're potential mitigations. So at the moment, we're in the actioning stage in terms of bringing in resource, ensuring the process is in place, realigning all the contracts. And we're well on with a lot of that, but some of that takes more time than others. In terms of the approval process, get relevant skills in, training of staff, all of those actions will take some time, and they won't reflect from an audit perspective in terms of a positive audit, and they shouldn't do until we've actually addressed them.
Okay. It's just that those actions that you are going to take to make things better weren't taken a year ago. So we're saying it's bad a year ago, but we're putting things in place to make it better. Are we just saying a year ago, this risk register, or 2 years ago, the capital programme was just wrong? It underestimated the risk and the work that was going on in that department.
I wouldn't, through you, Chair, I wouldn't say wrong, as in it only reflected the organisational knowledge. So fundamentally, the audit report has highlighted elemental parts, organisation, corporately to us that we need to address. That wasn't identified because we didn't have the audit report a year, 2 years ago. Therefore, for a period of time, because we know things that we didn't know, and we know we need to address those, and they're not mitigated, they're just mitigating actions within a full risk matrix approach. What you shouldn't do is increase your score until you've actually fully everything in place, and B, then you're implementing it.
Okay, we'll come back to this, I'm sure, in the private session.
Yeah, it's just a bit.
Councillor Merritt.
Yes, you've got in the report on page 448, capital programmes are sufficiently staffed to timescales. I mean, we know that local authority pay rates are not very good, and in certain areas, very, very much less than private sector, and therefore that obviously impacts on recruitment, on the calibre of people you're able to recruit, and also means that as soon as a job comes up, people are moving out. So, high staff turnover in key posts means that the organisation's resilience is under considerable threat. And I've seen it in other places. And so whilst you've talked about, well, we've taken measures in terms of interim staff, what are we doing to address the resilience issues and the turnover issues and the attractiveness of the jobs that we have in terms of the quality of staff?
I'm just conscious how much deeper into the matter of this particular session, but just in a general overview, I've pretty much got the senior management team in, and we've attracted some pretty good people in terms of their skills and knowledge. We are set within a local authority pay structure. Ours is lower than a lot of others. I mean, that's just fact. Having said that, we have got an exciting programme of work. So, and we are seeing through the recruitment we're undertaking, we're getting some really good people in, albeit there's work in terms of skilling, etc., and resourcing. We in the capital programme world, no local authority is ever going to be able to compete with the private sector because QS wage starts at 90k upwards. So we're never going to directly compete in that world. What we need to compete is in the world about how do we fundamentally get people in that are really excited about working for York, for our residents, excited working with a capital programme team. They know they're going to be supported. They know they're going to be resourced and upskilled. And we need to work on the basis that our teams will not be there forever because there is lots of movement opportunity, but we're actually bringing graduates through, we're bringing opportunities through, and we're creating a team that is constantly investing in itself. We've not been doing that, so the structures we've been putting in place enable that to happen in terms of apprenticeships, through to graded approach, through to the senior. So there is a pathway there. But accepting there will be always turnover just because of the nature of it and the opportunities elsewhere. A lot of people also stay because they're passionate about public sector and they're passionate about what we're delivering. So I'm confident we're getting there. We have some job roles out now that we're getting good response to. I've managed to recruit good people. So I'm confident that we're in a positive place, but in the context that we can't compete on wage, but we can compete in terms of the heart and the public sector and opportunity.
Okay, I've got a concern about the level of risk that's been identified. I mean, bearing in mind that we've seen 15 million taken out of the York Outer Ring Road dualling, reducing it to 42 million. We're looking at the cost of 165 million. I mean, we're not going to get the York Outer Ring Road dualled, and that is unfortunately part of our capital programme. So I'm afraid that aspect of it, I think it's certain we're not going to be able to deliver it. Unless there's a sudden rain of money from somewhere totally unexpected, possibly the mayor, but the combined authority mayor, I don't know. We're not going to get that scheme, and that is going to have much more than the moderate effect on the people who live in the northern part of York. I appreciate that we are going to get two roundabouts upgraded, but that's mainly to provide housing. Obviously, that's very important. but it won't solve the traffic issues around there. So I am concerned that we're underestimating the effect on that part of the city very dramatically. Because as somebody who spends his life sitting in traffic jams a lot of the time, it affects business, it affects people's lives. Because unfortunately, the north of York is largely car dependent because the buses don't go where we want to go.
Gary. Chair, I'm not sure it's pertinent to this specific committee, however, I will probably respond. Obviously, we've agreed a phase approach. That came in the July report last year. Accepting at this moment in time, we don't have all the funding, but we have enough funding to deliver the roundabout, potentially some additional elements, and we're progressing rapidly in terms of the relevant procurement, etc., that's required to deliver that. We're procuring on the basis that we're going to deliver the whole lot, because actually we're better having a contractor in place, ready to go. We have a mayoral authority that is maturing. In fact, has actually had a good transport assessment in the context that it's not fully formed mayoral authority. So there will be further opportunities for much greater levels of funding that we've seen in other mayoral authorities in future years. So I've got to have all confidence that we'll be able to deliver the whole scheme. The whole scheme has really good economic benefits, not just the parts we're delivering. Performs well in the national terms in terms of what the scoring matrix is for capital programmes. So we've got a collective level of confidence to continue to push for that scheme.
You are talking to the converted as far as understanding it. Since I started campaigning for it to be built as a dual carriageway in 1983, it is absolutely critical. We have to try and lobby the mayor at every opportunity to try and get more money, but that's for the executive to do.
Thank you.
Just a comment on that, Chair. What is being proposed to be delivered is not part of the original project. The original project was 7 roundabouts. The 2 that are going to be delivered were not part of that project. So I think it's good that everybody knows that. No, Wigginton Road wasn't in the scheme.
Yeah. I think we've dealt with the fact the risks are significant, and I'm not sure they've been estimated quite as high as some people would want them to be. But Councillor Rose.
Yeah, I mean, I think we're getting slightly off topic away from the risk aspect, but I just wanted to call out the point that doing it in a phased approach reduces the risk. And when Paul was talking earlier about the 20% repayment versus revenue ratio, that would go up if we had commitments for even more work. And from my side of the city, that was never part of the dual scheme, so it was never a fully dual ring road anyway. There's a lot that we need in our side, and there's a lot that we could do on a capital programme, but we are appropriately doing the minimum, and we're doing it phased, and we're getting grants whenever we can get for capital, and that all helps reduce the risk that we've got in front of us. I think that's the right approach for capital. How we execute the capital, still some work to be done, and we'll talk about that a lot more later and next meeting, but that's why that risk works, and I think phase makes sense.
Right. Any other comments? Any other questions?
Just echo what Jason has said, but also following up from what Gary said, the combined authority has agreed on last Friday, to make that bid for established mayoral combined authority status that gives the potential for those higher levels of transport funding that may enable the full project to proceed in reasonable time.
Let's hope it happens. Okay, if you're happy with that, we'll move on to the next item on the agenda, which is internal audit work programme consultation report. Connor, if you'd like to come to the table, thank you. Stand that way.
Thank you, Chair. Good evening, everybody. Chair, if I may, could I circle back to Councillor Merritt's earlier question regarding Section 106 in the action plan? We are undertaking an audit of Section 106 in the current audit year, following the committee's requests at the last meeting. It hasn't yet started, but it's in this current quarter's work plan. So we are absolutely going to carry that out. So for the benefit of the committee, the purpose of this report is to seek your views as required to under our professional standards for priorities for internal audit coverage in 2026-27. So not only are we required to undertake our own risk assessment, we're also expected to consult with officers in the council and this committee to determine how we best deploy internal audit resources in 2026-27. Those of you who've been serving on the committee a little bit longer will be familiar with the overall approach that we take. We refer to it as our opinion framework. The reason why we call it that is because at the end of each year, we have to give an opinion on the council's arrangements for risk management, governance and internal control. And the basis for that opinion is the work that we undertake in the year. So I'll just take the committee through some of the key parts of the report. So in paragraphs 4 through 7, on page 459 of your pack, we set out some of the challenges that we foresee for the City of York Council over the year ahead and beyond. And that really sets the scene for us explaining then the opinion framework itself in paragraphs 9 through to 19 on pages 460 and 461 of your facts. So I think the key thing for you to be aware of is we need coverage of 11 key assurance areas in total across our audit work to be able to give a well-founded opinion. We've given some examples in the report of the types of audit areas that we potentially could audit. They're not necessarily the ones that we are going to audit next year, but they are suggestions to help you understand and interpret those areas a bit more clearly. And so they're listed throughout the section labelled key assurance areas, which begins page 462. Now, we also have two other lenses to the opinion framework, and that is the key corporate risks, strategic risks, and the council plan priorities as well. So we're looking to make sure we're aligned not only with the assurance areas we've determined that are important to the ongoing success of the organisation, but the risks that the organisation is facing and the priorities that it's looking to address. And I think towards the end of the report, the questions for the committee to consider on page 467 of the pack, they were just designed as prompts for you to sort of help formulate your own views on areas to cover. And the next steps. So we are, at the same time as presenting this report to yourselves, we are actually in the process of consulting with officers at the moment. That's wide-ranging, cutting across all of the directorates and into specialist areas to make sure that we understand the risk profile of the organisation and then add in our own thoughts to that in the conversation as well. So that's all with the intention of presenting our draft work programme to the 11th of March 2026 meeting. So at this point, Chair, it's just over to the committee for any questions or suggestions for inclusion in the 2026 work programme.
Councillor Whitcroft.
Thank you, Chair. Thank you, Connor, and thanks for the report and for waiting for 2 hours to come and speak. Do appreciate it. On Monday, we had our place scrutiny meeting and we discussed the asset management area. I think those of us who were there will remember where we looked at the different businesses or at least different properties that the council owns and lets out to local businesses. And I think how the council works within, as sort of a landlord to an extent within the local economy for local businesses and in other ways, I think is an area that we want to focus on a little bit more as a council. That's definitely the nature of the report that came forward. I know Debbie was there as well presenting. I think looking at asset management, that's marked out on paragraph 38. I think if there is some audit that could be done there from yourselves externally, I think that might add value to that ongoing piece of work.
Councillor Rose.
Thanks. I think it looks pretty good. I like the 11 key assurance areas and the fleshed out aspects of what we've described before, and there are some deep dives in there that we've asked to be added that are now included, and it looks good. Thought occurs to me as I was looking at, we mentioned equalities, inclusivity as one of the areas before. It's entered here as something about internal people rather than it being perhaps broader across everything the council does. And I know that we've got as a council those kind of 4 principles of the each principles: equalities, inclusivity, human rights, affordability, cost of living, climate, environment, health and well-being. And I was just wondering to what extent those are part of the way that you approach each of those different topics. So when you're looking at it, it's not just through the lens of, is it done in accordance with governance, but is it achieving the equalities outcomes it's supposed to achieve? Is it achieving those climate and affordability and health outcomes? And I just wondered if you could talk to how you do things in that respect.
Yeah, so insofar as systems are designed to already facilitate that purpose on the council's behalf, we do, so if these are aimed and objectives of the service and to make sure we provide an accessible service that, is appropriately delivered to the residents that we have in the council area, yes, we do. If it's one or two steps removed from that, but you could see it as making an indirect contribution, we're less likely to as a criteria for auditing. But I would say where it matters most in terms of the most sort of public facing elements, yes, we would include that in our criteria for consideration.
And if the service wasn't described as something that had equalities at its heart, but it should have that, is that something you'd call out, or would that not make it into the criteria because it's not defined in the service?
No, we wouldn't necessarily. So we would use, our starting point for the criteria would be what the service is set, but we also would apply our own professional sort of judgment on top of that as well. So if we felt that that was missing from a part of how the offer is delivered as a service, then we would remark on that.
Thanks. I'm just thinking, obviously, every service has some climate impact, some equalities impact, and sometimes it's not discussed or appears on our radar. But thank you.
Councillor Healy.
Thank you, Chair. It's a suggestion for an internal audit, which Debbie, feel free to come back if it's not relevant, but something I'd like to see covered somewhere in some committee or some report. We've just kicked off this year, financial year, our efficiency programme. Next year, the savings significantly increase. I believe, is it 4 million, 4.5 million? So quite high. So for us, we're setting up something new this year. The savings targets were quite modest. Next year, they get considerably greater. It might be worthwhile, and I don't know whether it would be suitable for something for you to do, sort of around the halfway point of next year to carry out an audit so that if things can be improved or things are going off track, we've got an opportunity to pull them back. Because I wouldn't want to get into the situation where we're missing a trick, we don't hit our 4.5 million, we get towards the end of Q3, Q4, and it's suddenly a case of, okay, I just need to cut stuff. Because that's not the entire, that's what we're trying to avoid. We're trying to avoid just randomly cutting stuff. And that's what the efficiency programme is there for. So Debbie, feel free to come.
Yeah, that's we could definitely, you're absolutely right. Something around that transformation programme would, be appropriate. So we can have a look at it now.
That's the merit.
Paul's asked half the question that I was going to ask. I was actually going to ask the wider question about the interrelationship as a whole between the transformation programme and the internal audit work. You've picked up half of it, but the other half is, are there particular things that would be sensible to do internal audits early in the year to actually do some of the homework for the transformation projects?
That's absolutely a way that our internal audit resource could be used. Yes, so we are meeting with us as part of consultation, so we'll understand where the transformation programme has got to, where it's going, and what it still needs to do. Obviously, there's a way that our skills lend themselves. We understand risk and control and governance, so we should also then understand, efficiency as well and value. So I would like to think we could do some work upstream of changes being made to support that transformation programme. And I'd totally be, all of us would be happy to assist in that way, as well as providing, routine assurance.
As the merit again?
Yes. In that regard, we've obviously setting up scrutiny, task and finish group around social care. And I see that you've got social care delivery and commissioning under your strategic planning. Is that one that it would also help the task and finish group, perhaps?
We can take that away and have a look at the. I'm not sure if the timing will work out, so we'll have to have a look, obviously you know, we can't do all the work in one quarter, as it were, so we'd have to just schedule in, but yeah, I'm sure we could accommodate.
Okay, are there any further questions? Thank you for the report. I hope you feel you've got some suggestions from us.
Thank you, Chair. Thanks, committee.
Moving on now, let's see what we got next. Work plan, yep, that's it. That's right. Getting to the back of the document, finding the front again is getting difficult. Audit governance work plan, which we have on page 471, 72. There we go. Yeah. Right, are there any members like to comment on the work plan and make suggestions? Councillor Rose, go on then.
I'll accept it. Yeah, no, Councillor Code of Conduct, we've got meeting the diary outside of A&G that I think will help contribute to greater awareness across councillor base, but I think it still probably needs to come to A&G, probably not in the March meeting because it looks pretty stacked, so I guess that'll be the May meeting or whenever it is, but that's my only comment. Other than that, the work plan looks fine, and I can't think of anything that we are anticipating coming up. We've got the ways of working in March, which is the big one.
Councillor Healy, sorry. Thank you
very much, Chair. Not wanting to get into the next confidential report, but all the actions are due to be completed by July 26. It might be worthwhile scheduling something in the work plan if this is the appropriate committee for it to come to, and not corporate scrutiny on just that, you know, all of those actions have been undertaken. We're seeing positive outcomes, because that's it. We're meant to be in a much better place come July.
Yeah. So obviously members will be aware now that we're going to add an item into the March meeting to bring something back in relation to that. The question then becomes, we have, as far as I can see from the current draft of the 26-27 calendar, the first meeting is the 1st of July. So whether that's a date where we can provide a written update following on from the March meeting for confirmation of whether or not those actions have been concluded, and that then gives members the ability to look at it, and if they haven't, you've got the ability to recall and pull things back into the committee's remit.
Okay,
is that helpful? Or?
Maybe not on the timing. The last actions are due to be completed by the 31st of July. So I'd imagine the relevant meeting for that to come back to would be the next one after the 31st of July. Otherwise, you're cutting Gary's time short by a month, which I feel is a bit unfair.
That would then be the 16th of September.
Yeah.
Is that...
It's your work plan. I'm only suggesting.
I can't see a May meeting.
There's a May meeting every year and a July meeting every year. Historically, I know we've reduced the number of meetings in total, but March to July feels like a big gap given our financial cycles. If we haven't, that's fine, but I assume we've got a May.
We don't seem to have one scheduled at the moment. If members want one, I'm sure we can look for a date early in May before the AGM, because the calendar tends to start from the AGM onwards, so we can look for a date in the first couple of weeks in May.
Yeah, it was the 22nd of May, 14th of May previous year, so yeah. I don't think it was ever particularly helpful that it was right in the middle of AGM season, or annual council season, but yeah, it's whatever works.
We can look for a date, a suitable date, and we'll talk to the chair and vice chair about getting that arranged.
Right. Two things that we need to add the report on item 13 on the agenda. Secondly, will the Council Code of Conduct, will the liaison with joint standards over that?
Council Code of Conduct, sorry, I'll turn that back on. Council Code of Conduct will come to probably the March meeting. Obviously I won't say it's not a challenge for members, but given that it's been through the Joint Standards Committee, it's probably not something that you would look to make any significant changes to here, because it's been through that body of councillors already. And therefore you would look to probably look at that with any associated tweaks that we need to make to different bits of the constitution on the back of that, and then passport that on to full council, and then council at the end of March would look at approving that.
So in other words, our changes won't go back to joint standards, they'll go straight to full council and deal with that.
Yeah, so,
Okay,
so now,
that's okay.
now that the full committee of joint standards has agreed that revised protocol, that would come to here to then be referred on to council.
Okay, it doesn't go back.
No.
Any other questions on the work plan or any comments on it? Nope, in that case, we'll move on to item 13 now. There are some documents in the white papers which we can discuss in public, but obviously can I ask members to make absolutely certain they don't make any reference to Annex 1, which obviously is when we'll go into confidential. What I suggest is we deal with the public part of the agenda, whatever we can, and then we go into private session and take a brief adjournment.
So if we're going to go into private session, then obviously members will need to formally pass the resolution. Yeah. Do that, so that we have that on the record.
Right, so.
Yeah, happily to formally ask. Also, do we want to take item 14 before we move into private session, just to keep the public recording of the meeting?
Yeah. There have been no aspects of urgent business, so therefore we can, sorry, I the word, and so we can get rid of those. Okay, would you prefer just to move straight into exempt? If so, would you approve that?
Yes.
All members in favour, please show. Right, so if we could now end the I think we have to discuss the agenda annex if we're going to discuss it in detail, so we might as well stop now.